on my LinkedIn. We're live, back for another 12:30, just a couple of minutes after. Thank you for everyone that's been watching so far and anyone that might watch today or catch this on the replay. I'm lucky enough to be joined by Daniel Gold today. If anyone that's seen any of my lives in the past, Dan was my very first guest way back when I first started doing this. He came into the office.
Was that the mishap or was that the actual recording?
No, so we did the mishap. And then we did a take two the week after or the week after that. But regardless, the first one. Maybe let's start with, as I've been starting a lot of these conversations, where are you? Are you work from home? Are you in an office? What's your situation at the moment?
Yeah, so I'm still working from our office in Toorak Village, but all of our staff are working from home.
Yep.
And I mean, this is effectively akin to working from home in the sense that it's a pretty small office. It's not highly foot traffic. There aren't many people in here aside from like one or two other colleagues from different businesses. So yeah, pretty safe in here, but pretty lonely. You know, it's just a couple of us.
What's the street like? So you're on just off Toorak Road there. What's the little strip of shops like? How's that going?
It's very quiet. I actually just read an article in the AFR this morning saying that I think 100 of the 540 test positive cases in Victoria are in Toorak.
Oh, really?
Yeah. So we're obviously a high risk kind of suburb for whatever reason. Maybe it's like a slightly older kind of average age group or whatever. But no, everything's shut aside from the supermarket, which is pretty busy.
Yep. And how are you managing your days? Like, have you just had lunch? Were you just powering through? What's your days been like?
I thought we were going to talk hardcore property and finance, James.
We'll get to that. We're just warming up.
Just warming up. So, look, we have been inundated with inquiry, as I'm sure you guys have it as well. So, our days are like, you get in. You make 100 phone calls and then you look at your clock and it's 6 o'clock. Like, it's that kind of environment.
Yeah.
So yeah, I mean, obviously a few workarounds with kids and family and just various other things. But yeah, we're grazing on some homemade food during the day and really just kind of staying sheltered.
Yep. And so, is your wife at home?
So my wife Elise is doing a little bit from home, but we've actually got an empty office here as well. So when the nanny's around, then Elise can kind of escape and get some work done herself. Yeah, we're still trying to figure out exactly like whether nannies fall into essential services or not. Or, I don't know, but we're distraught without our nanny, so we're just hoping that she can continue working if at all possible.
Yeah, you wonder what happens if we eventually get to that kind of full lockdown. If the nanny's with you when that gets announced, is like are they stuck with you or not? We'll have to.
We're all just kind of learning day to day, aren't we?
Yeah. Funny times. So have you managed a bit of a routine? Like, what's the?
No. Routine is generally for us. With the similar, but I mean, we're just. I mean, I'm a cafe guy. I'm often just 2 coffees a day and lunch out and that kind of thing. So that's the I guess the new world that we're getting used to. I do all of my meetings in the office, but obviously no clients coming in here anymore. So we're doing a lot of meetings via video conference, plenty of phone calls, that type of thing. But yeah, I mean, my routine is pretty much just work. I'm home between 6 to 9 p.m. to do all the kid stuff with baths and showers and food and putting to sleep, and then often I'll log back in at 9 to try and catch up on some admin before coming home at 11. Yeah.
Okay. We'll kind of jump into what you're doing work-wise, and you said like it's quite busy. I'm keen to kind of understand what's going on at the moment. But for anyone watching, if you've got any questions or anything, leave them in the comments. I'm sure Dan will happy to spend a couple of minutes at the end answering those. But what's happening at the moment? Obviously, interest rates have been cut a couple of times now. The banks are passing that on. What type of work are you doing now? What are people doing?
Yep. So couple of things. So a lot of our clients who have purchased properties recently are looking to bring those purchases forward, really just because of all the uncertainty, and they don't know what's necessarily going to be happening in the banking world in, say, 2 or 3 months from now. So settlements that were scheduled for 60 or 90 days are now coming forward to 20, 30 days, and that's obviously creating some pretty significant bottlenecks in the at the banks themselves. Right, because they're just having to assess a whole bunch of new applications more quickly, and in addition to that, they themselves are managing now remote workforces, which has an impact on efficiency. So there's no question that the banks are moving significantly slower now than they have been in recent times. To put that into perspective, there are some banks that can't assess an application within a month.
Right.
Which is extreme, right?
Yeah, it is.
So that's one thing. The second thing is that there are a lot of people that are looking to refinance at the moment because of the interest rate cuts that you were talking about. Whenever there's an interest rate cut, different banks make different announcements, and there always becomes a bit more of a spread in the marketplace between competitive offers and also just the delta between a client's existing deal and rates versus what else is available out there. So you've got that combined with the fact that a lot of people might have income security at the moment, but there's also this fear of the unknown.
Yeah, that's a big one.
9 months, what does their employment and income situations look like? So to the extent that they can refinance, maybe get a better deal, potentially release equity if there's some equity available in their home, they're popular requests. And it's really just kind of protecting them in case disaster strikes and they're unable to tap the banks later for money.
Are you seeing, do the banks seem to be any hesitant at the moment around like the reliability of income? Like if I was to go for a home loan today, are they stress testing that at all any more than they would have otherwise?
Not for the top financial planner in Melbourne, James. You'd be fine.
Maybe not me, but maybe someone else might be watching. We're all in this together.
So definitely. I'll give you a couple of good examples. So, and it makes complete sense, right? Like if you're a bank and you get approached by somebody who, is in tourism, hospitality, aviation, retail, would you lend them money?
Yep.
It's tough, right?
Good question.
So, sorry?
I said it's a big question mark, isn't it, over those kind of industries?
No doubt. So we've already started seeing some banks make announcements that they're changing policies temporarily to the extent that they're not going to lend to certain borrowers in those sectors.
Okay.
Which is very concerning.
Yeah.
In addition to that, we have actually seen like one application withdrawn for, like the bank declined the deal for that reason, which is tough. And then we're also obviously seeing some rate movement. So whilst the RBA have decreased their interest rates, and you would have seen a lot of the major banks at the beginning of March pass that on, when they did the emergency cut last Thursday, only ANZ passed that on, no other bank.
Really? Okay.
Yeah, but some of the smaller non-banks have actually increased their interest rates.
Oh, did they?
Because they're worried about funding costs as a result of the capital markets overseas potentially seizing, and they're more reliant on these overseas capital markets for funding in comparison to the large authorised deposit-taking institution, i.e. the big bank in Australia that's got deposit funding as well.
Yeah.
So any bank that doesn't have that diversified funding mix, I think, is under a bit of margin pressure at the moment, and we could see a bit of a spike in rates there.
Yep. So no wonder you're so busy at the moment.
Well, yeah, I mean, in addition to that, all clients just want to know, how does this impact me? And there are a lot of clients that are approaching us now around, hey, I own this investment property. My tenant has just approached the managing agent saying that they can't pay the rent because they've just gone to work without pay or sorry, leave without pay or reduced hours or whatever. So there's this flow up system which starts maybe at the tenant level and then gets to the landlord and then gets to the bank. So there are a lot of queries to the bank around, freezing mortgage repayments for 6 months and those types of things that we're dealing with as well. But yeah, no doubt, everyone in the industry is just under the pump. Lots of inquiries, and it's just unprecedented what's happening.
And those freezing of repayments that you just mentioned there, like what's happening there? Are some of the banks doing it? Some aren't. Like, can you?
Most banks are.
Yeah.
Are you still there, James? You just froze.
Yeah. Oh, I'm here. Can you hear me?
Hello.
I'm here.
You're here? All right, cool. Technical glitch number 2 for Dan.
Yeah, that's it. Yesterday I did one and it dropped out altogether. But at least this one didn't drop out altogether.
All good. So yeah, the short answer is most banks are.
Yeah.
But there is a terrible misunderstanding, I think, at the client level as to what these mortgage holidays actually mean. I think a lot of people are like, oh, the banks are allowing us to stop paying our mortgage for the next 6 months. Great. How do I get on this gravy train? Right?
Yeah.
But the reality is that whilst the banks have been very good, they're making it very easy for borrowers to kind of switch to these new arrangements, be it a complete holiday or a switch from principal and interest to interest only. Interest is still accruing over the 6-month period, and that is information that all borrowers need to be aware of. Therefore, after the 6 months, you're now condensing, the total commitment to the bank over a shorter period of time, and people's repayments then are going to increase slightly to absorb that.
Yep. So they're bigger out the other side. Yeah. That's good. Thanks for sharing. I actually had a client inquiring earlier this morning about how that worked, and I didn't know. So
You didn't refer them to me either, James.
They already had the mortgage in the first place.
Right.
Yeah.
I got you.
Okay. Good. And the equity release, and that's something else that I'm seeing. Just people I talk to are kind of are interested in. Certainly at the moment, a lot of my younger clients are saying, look, we've got enough time ahead of us. The economy is going through a bit of a rough patch at the moment, but they're looking forward enough to say that this will pass eventually, and kind of looking at ways that they might be able to capitalize on potentially lower property prices, certainly lower share market prices that we're seeing today, how they can do that. And this equity release is one way. How's that going? Are the banks any more difficult at the moment doing that than what they were before?
Most banks are still fine there, no change.
Yeah.
But I think it really comes down to the nuances of the individual borrower's application. I'll give you an example. So we already spoke about the different sectors that they're starting to, consider in closer detail, right? So there are obviously a few high-risk sectors which are going to find it very difficult to obtain finance soon. The second key point is the composition of people's income. So in our business, as you know, James, we deal with a lot of people in the financial services industry, a lot of bankers, private equity, funds management, investment banking, that type of thing. A very large portion of those clients' remuneration is bonus-based.
Yeah.
Right? Client earns $200,000 a year base and $160,000 a year bonus. Is that client going to receive the bonus this year? Don't know. Maybe not. Maybe less. If the business is earning less, if their underlying investments or portfolio companies are earning less, there's a very, very high probability that discretionary bonus is not paid. So if you consider that in the context of a bank's lending policy, often they're going to look at the last 2 years of bonus history, and some banks even just look at the most recent year. So if it takes it into that next, payment cycle, and the client's looking to borrow money in March, let's say in May, but in April they got a nil bonus for the first time in 10 years, that could really deteriorate the strength of their application, particularly in the example I gave where it makes up such a big part of their overall earnings. So big message to anybody that and it's not just bankers, heaps of people earn bonus income in corporate, right? So just be careful of that, because I think that could deteriorate people's borrowing capacities if they get caught out.
Yep. Okay. Good. All right. Well, I don't want to keep you too long. I know you're well and truly under the pump at the moment. We had a quick catch up earlier this morning before we went live today. Anyway, so thank you for joining me. Maybe we'll just finish. There's a few people have just put in the comments where they're calling in from. So Chris is watching from Sydney. Graham from the Philippines again. He's been tuning in every day. Thanks, Graham, for watching. Danielle in Wollongong. So there's 3 people have left some comments. There's been 11 or 12 people watching the whole way through. If anyone's catching it on the replay, leave a comment below. If you've got any questions for Dan, I'm sure when he's got a moment, he might be able to come back to you and answer your questions or help you with your borrowing needs. Dan, maybe last thing, where can people find you? Obviously here on LinkedIn where we're chatting now, but other places where people can find you or your podcast or anything like that. You want to give it a bit of a plug?
Where anywhere, just, Long Property is the name. But I must say, James, you'd have to be up there with the top, if not the top, LinkedIn hosts globally. I'm very impressed.
don't know about that, but I'm just trying to.
Are there any other LinkedIn hosts? What's your host?
Tune in on Monday at 12:30. No, I've got someone joining me on Monday. Mitch Goldberg. He's a financial advisor that's in America. He lives in New York State. Who's been doing 4:30 his time, which is I think it's like 8:30 in the morning here, right? 7:30 in the morning here. He's been doing live kind of wrap-ups of the stock market and how you can manage through and all these kind of things. They go for about half an hour. He's been really, really good at doing it. He's joining me at 12:30 our time Monday, which is 9:30 Sunday night his time. He's going to be joining me on Monday. He's doing a tremendous job of it too.
I just have to say one last thing. Well, 2 things actually. One is to anyone that's listening, those 12 people out there, stay well, stay healthy, and look after yourselves and your family. Second thing, James, the best part about this LinkedIn Live?
The Lego guy building the Lego behind me?
Yes, the background. The background. Hey, Tommy.
And all the rustling. He's got it was his birthday during the week, and he got a couple of Harry Potter Legos. So he's got the purple bus that he was building, but then the night bus he's calling out the night bus. But then our younger son pulled it apart last night, and at the moment he's building a Quidditch pitch over here made of Lego.
Amazing. He's doing a good job. I'll leave you to it, guys. Thanks so much.
Thanks, Dan. Thanks for joining me. Talk to you soon. Bye.
All your lives may be building Lego in the back.
You're still on, Dan?